Tuesday. Welcome back. Final hour session just after 3 p.m. on the 24th. Hey, all-time highs are bust. Little Israel-Iran ceasefire announced yesterday. Market got real excited, and we gapped up today and didn't look back. So intraday price action, we had a close yesterday around 60.25 SPX, gapped up about 0.7%, and proceeded to go up towards a really nice liquidity level at 6,100 today. Ended up grabbing a couple of profits out of SPX this morning. Tempted to take a trade right now, just not going to get the credit for it. So I'm just going to sit. Final hour, not really the time to get super risky here when it's all risk or all reward. So I'm just going to stand out. Made a nice little win on the day. Ended up grabbing about $240 today. So not too shabby. Also hitting all-time highs in the portfolio again for the year. That's great. So yet again, making new highs in the portfolio, some income, all that's good. I said this on my Telegram channel just a moment ago. Cautious at the top for obvious reasons. I think we're running thin on this momentum. I'm seeing some overbought conditions with some divergence, but it seems like the market is at least trying to get to the highs before the next big inflection point. So I initially thought that the end of the month, end of the quarter would lead us back down to about 5,900 or so. But instead, after the ceasefire today, the market's up to around 6,100. I do think this melt up could continue. I think this melt up to like 61 as it's looking at today, maybe to 6150, 6200. I do think there's going to be like, congratulations, the market pokes all-time highs, and then we have a little bit of a reality check at least through the summer. So maybe July, August, September, a bit more of a headwind versus just nonstop melt up. But seasonality-wise, July is still pretty bullish. August is as well. It's usually like the hiccup in end of August, September that the market tends to correct. So it's just not something I want to fight. I mean, it's exhausting to call the top. It's exhausting to be a bear in an inherently bull market. And I think you're crazy if you want to be just perma bearish. So if anything, if the market offers dips, I like to buy the dips. So fresh highs in the year, happy with that. Trades went pretty well today. Watch some of my key levels. We talked about this morning in my daily profit play. So ended up grabbing some profit in here in the morning. Ended up grabbing some profit in here later in the afternoon. It's right back up to kind of my top level. It's tempting to take this kind of final trade around 6,100, but I'm not getting the premium that I want, so I'm not going to take it. But I guess, directionally, it's like, yep, we got to 60.85, we got to 60.90, we got to 6,100. On the day, we're looking at 1+% gains on the S&P. Tape says 1.23, SPY's up 1.23 as well. NDX 1.65, Q's up 1.68, Dow up 1.25, Russell up 1.34. Big day for U.S. markets. I want to say that the world's probably benefiting from it as well. Let's have a look at heat map. Heat map says 77% of stocks advancing. That's big. Okay, how's the world doing? Home. Let's go to heat map. So S&P, 77% of stocks up today. Energy still a little bit rougher. Oil is taking a huge nosedive. So it's not a surprise that energy is down. Industrials also down. I'm curious what sector is leading the charge today. We go to sector performance. So one-day performance, we have energy down 1.42%, S&P's up over 1%, communication services 1.27%, financials up 1.69%, technology, I was going to say, this seems like a day that tech's leading the way. This is kind of a big risk-on day, 1.75%. Year-to-date, here we go. S&P year-to-date, this needs to update. I think we're over 2+% now, maybe 3% of the S&P after this gap up. Year-to-date. Come on, probably updates after close. All right, we'll spot check this at the end. What are the big ones? Let's see how the world is doing. So one-day performance, S&P versus the world. Lots of green. China's green today. Europe is green today. Canada mixed. Okay, but I would say China's big. South America, Brazil, little red. Some winners, some losers, kind of mixed. UK mostly green. But big ups in this is, China pretty much all green, Japan all green, Taiwan is just TSM. It's the only stock they have. No, I'm kidding. But up about 4.5%. Most of Europe doing pretty well. So, I mean, it's a full-on risk-on global market. Let's have a quick peek. What's our we opened up the VIX this morning around 17 and change. The VIX is now down to 1738. This has been down all day. We looked at this morning on a 10-minute time frame. And we jump back and forth between when we came into market around 9:30 a.m. Let's see here. So 9:30 a.m. is right around here. So VIX, jumps up a little bit, fades, jumps up, fades, jumps up, fades. But from 1824 all the way down to 17.38. I was looking up at a 1.1% move today on the S&P, and we went a little bit higher. We ended up going like 1.16, maybe a little bit higher than that. So this is from the close yesterday. We went about 1.25. Now, I'm curious where the close is going to be here in the next 50 minutes or so. Are we back down to about 60.90? Are we back down to about 60.90, 60.85 or so? It wouldn't surprise me. Like hitting 6,100, maybe that's enough resistance intraday that we at least fall. But maybe like that, we talked about like a 1.11 potential gain on the VIX today. Like VIX rule of 16, maybe equaling an S&P move of about 1.1%. So we ended up going a little bit higher than that, 1.25 with the melt up, but 1.1 was kind of the plan. So if we come back down to like 60.90, that'd be like pretty spot on for intraday price action, which is pretty impressive. Okay, let's go other markets. So S&P up, Nasdaq up, Dow up, Russell up. Let's see, move index, bond volatility. Go to the daily. Bond volatility, okay, like smashed back down to low since April. Not a surprise. SVXY, we have no volatility event, so it's just low, like slow and steady. Any type of volatility event that we do have, I'll be buying some shares of SVXY. Dollar index, right back down to lows. We've had a pretty strong 2-day sell-off. Here is your currency strength chart for today. If I can spell it. Currency strength chart, dollar weaker, Swiss and yen on top. This is an interesting flow for currencies today. We have safe haven at the top. We have dollar at the bottom, and yet the equities market is up. Like equities up, dollar down, but meanwhile you have Japanese yen and Swiss, which are both safe haven currency pairs that have made a run today. So currencies are getting an interesting mix of like, this isn't risk on. This isn't a risk on day. But dollar CAD at the lows, Eurozone a little bit below baseline, Aussie, New Zealand, and pound a little bit weaker. But yeah, Swiss and yen both a little bit stronger. That's an interesting mix, but the dollar mostly taking it right in the nose. I still think this is a bear trap. I'm not shorting the dollar. I think if the dollar pivots at all, meaning this, like we kind of, hit some levels, maybe find some symmetry, the dollar pivots. And I think any type of bid in the dollar, if we have a bid in bonds, bid in the dollar, I could see that being a little bit of a turning point in equities for maybe a 3 to 5 to potentially 10% correction. But that just seems like a lot. Like, what is it going to be that gets this market scared enough to correct, 5 or 10%? I have no idea. At this point, with all the stuff the market's ignored so far, I have no idea. I kind of want to see it. I don't know what it's going to be, but it's like I'd like to see it because I want to position for better gains ahead. Oil, like I said, just massive 2-day drop in oil. Yesterday it was up to 77, just smashed back down to 65 and 66. Today we're down below 65. I still have a futures trade in here. It's taking on some heat, but I like to trade with high probability. It's a 1111. Futures has to be below $50, by the way. So I think out to July, there's still a really good probability that I keep the trade. Copper, I want to take a quick peek at copper. It's down here somewhere. Let's go natural gas. Natural gas also fading pretty aggressively. I don't think I got UNG called away. That was last week. I did a roll on UNG last week. So UNG 17 out to July 11th. So yeah, I'm hanging. I mean, I'm up like a couple $1,000 added to the diagonal spread. TLT is up to 87.39. I've got covered calls at the end of the week. It's the sell side of my diagonal spread. 65 by 89 is my diagonal spread. If we get up to 89, I'm going to let this get called away. Right now, this is worth about $12,000 in profit. So hopefully it gets called away. With the contract size I have, I don't really want to have TLT in the portfolio anymore. I'm trying to play a little bit safer. Obviously I know like, oh, TLT is safe. No, it's not. It's not safe haven to me. TLT is, we have to hope that the U.S. stays stable enough that everyone still wants to buy our debt. I think that it will happen. I think that the wheels have to be greased. But we are typically just going to offer short-term debt and focus on short-term debt only, and probably have the inverted yield curve will continue to disinvert and stay steeper. And I don't necessarily love that. So if we're going to continue to pass the tax bill and raise the debts and raise the deficits, I don't think that I want bonds that are due to basically just go lower. Risk appetite tells me that Equities offer probably more growth potential than just sitting in bonds, underperforming. So yeah, currency chart was kind of weird today, wasn't it? Japanese yen and Swiss on the strongest side today, while everything else is. Equities are. Equities are way up today. For a low volatile environment, equities are way up today. The whole world is seeing higher equities. Let me check and see. So even bonds are up. So let's go like U.S. 10-year. So U.S. 10-year. 4.29. It's like bonds are. So bonds are up, yields are down, but currencies. Yeah, you're getting some weird move. And let me see what gold's doing today. Maybe gold and the Swiss are still a little bit more intertwined. Gold. What? XAU USD. There we go. Gold's down. Yeah, it's an interesting day. Dollar down to like the weakest currency pair. Okay, gold is down. Gold is down, 1.5% today. I still think gold needs to have a pullback at least to 3,100. I think gold pulls back even deeper at 3,000 ish. This would be XAU spot price around 2,950. I'd still like to see. My positioning on gold is let's get back to the 144 200 moving average. I'm going to buy some gold. So I'm trading GLD with a couple of naked puts, the 270 and the 265 naked puts. I've got a 111. I've got a hedge on at 230 as well, just in case. But I'm hoping that we at least have a bit of a pullback. Silver had a bit of a pullback. I think silver remains bid. I still like silver quite a bit, and I'm looking for silver to head up to 41 and up to 48. So bigger targets for me are still upside on silver. Even if we get to my first measured move, that would put silver up around another 14%. If we get to the all-time highs, which we hit back in 2011 and 1980, that would be over 34% if we hit all-time highs. So this is on XAG, so that's with current price. So actually, technically, if I go to all-time highs, that'd be around 49.85. That might be up towards like 40%. Yep, about 39%. So I do like that kind of measured move till we hit all-time highs. I think going after like 35 to 40% from here, and also buying dips to add to that a little bit. I like silver a lot. Okay, what do you think about buying TLT 88 call June 2026 for around 480, then selling monthly calls against? That's exactly what I did already, MP. That's the trade that I'm already in. I went deeper in the money though. I bought a 65 call, and I've been selling against that debit for the entire year. So when January 2025 rolled around, I bought TLT with a 65 call, which was around a 70 to 75 delta call. So I bought that $65 strike. I paid around $22.50 for it, but now my debit is around $20. So my break even is $85, which means we're trading at $87.35. I've got a couple of dollars per contract, and I'm trying to get it called away $89. I'm not trying to make a ton of profit here. Obviously, I'd love to say that I think TLT is going to 95 or 100. That story for me has changed. For me, this is I have a good chunk of income already provided. I wouldn't be terribly surprised if TLT just continues to rally and fade, rally and fade, rally and fade. I don't know how much rally we get here, but we have been making lower highs and lower lows, lower highs and lower lows for a while, and this 200 moving average is potentially going to act as more resistance. Now, ultimately, this probably has a squeeze trade. I just think that maybe that comes with a risk-off environment. But right now, this market likes risk on. And I could see even this little tiny rally can get pushed right back down to the lows. So if you're interested in buying TLT, I wouldn't buy it now. I would wait for this thing to retest lows, maybe looking at some buy calls, then, and then establishing like that 12 to 24 month kind of diagonal spread and selling against it. So that's what I did it last year. I made a good chunk of profit on TLT. I'm doing it this year, and I'm just trying to get out of it. Same thing. Like if I get called away at 89, great. If it's at the end of the month, which is the 30th, if it doesn't get called away 89, then I'll probably sell another one 30 to 45 days out, maybe 89 again, maybe 88. Just depends on the strikes and the break evens. Okay. See here. Silver saw extreme positioning from both commercial large speculators in the last COT report. Extreme positioning. Yeah, okay. I still think silver remains pretty well supported, though. Even if silver was extreme positioning, it's like, yeah, people are chasing it. Okay, so what happens on silver? If silver goes, back to support, there's some support in here. If we go back to support, there's still support in here. If we just have a pullback into this structure, I mean, to pull back to like 34, 33 and change, I'll pull back here. I still like that we're in, what looks to be a pretty healthy bull market. So, I mean, I wouldn't say silver is really invalidated unless we're coming back below $26. I think silver looks pretty good to the upside. Can I show examples of bearish? Absolutely. Yep, bearish divergence, lots of it, or hidden. I should say hidden bearish divergence. Yep, I'll show that on one of my workspaces. And then EMA, you have it. It's EMA, exponential moving average. Are you asking for the periods? I've got a 21, a 50, a 100, a 144, and a 200. Exponential moving averages. 52-week highs. Yeah, that's fine. I mean, if it's retail and institutions, okay. I mean, there's not really a contrarian play there, but yeah, I don't know. Honestly, like I think the posture of silver looks so good. It's like even dips. It's like I'll buy dips. I'll buy the dips most likely. All right, let's talk some divergence. Let's talk some divergence. How will this thing work out today? So market this morning, we go 24th. I mean, this thing was bullish at 10 a.m. and just didn't freaking look back. 19 to 40, 20, 24, 25 points up. It's not bad for $5 a point. Okay, I'll bring up the workspace here. I have one called harmonics and pivots. This is where I have a bunch of my favorite indicators that will show kind of the top formations. So QQQ, we've got a zigzag that's up at the top. Again, this can repaint, a daily and weekly can repaint, but it's looking for a topping pattern. Okay, so that's number one. Number two, I've got a subgraph here that shows momentum and relative strength. Momentum is my top subgraph, so this is momentum. I'll put an M here for momentum, and I'll put an RSI here. Okay, so MOM for momentum and RSI for relative strength. So we are making highs, highs, highs in price, price and momentum disagreeing. We're making highs, highs, highs in price, hidden bearish divergence. Relative strength is not making new highs. This never means that the top is exactly here. What it means is I would say that be cautious of a top forming in the near term. And hopefully, if you like the bull market, you're looking to wait for price to kind of fluff, or flush out, correct, and then give a chance to buy some dips. We also have strong demand, and strong demand. So any pullback would likely be met with some buying frenzies. I want to see a reasonable pullback. That's on the Nasdaq. So the QQQ overbought conditions with divergence. Okay, that's daily chart. Let's go to the weekly chart. Okay, weekly chart. Zigzag is still sitting here at the highs. It keeps repainting. That's okay. Momentum. So if we have highs in price, it's not this high that I'm after. It's more like what's happening right here. We're making higher highs, higher highs, higher highs. Momentum is still growing a little bit. So we could still, I mean, and maybe this is a big difference between the daily and the weekly. Maybe the weekly just still wants to grind. Maybe the weekly RSI still wants to grind. If we hit overbought conditions on the weekly, then absolutely looking for a correction, looking for a correction, looking for a correction, right? So there might still be like a melt up catalyst here. Like maybe we get up to, highs around, I'm not sure what the high is, 540 something. I mean, Nasdaq is like almost near the all-time highs, right? Look at this thing today. Nasdaq's up 1.6%. We have highs at 525, and today's, that can't be right. Highs at 540. Okay, almost 541. I mean, my God, we're right there. We are right there. Like Nasdaq is pretty much at all-time highs. S&P is just shy of it. So anyway, could it melt up higher? Sure, maybe. This is not something I'm fighting. I'm just waiting for a flippin' pullback, So we'll see. And here's a good example. Like, take a look at this recent price action. I know this chart gets a little messy, but because this was so much consolidation, I wouldn't be surprised. Let's say that because of this gap today, this market goes up, 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 gets above these highs, and then something propels this market to go lower. We take out some of these lows, and then this is a quick sell the rally, right? Like we sweep these lows, we pull back, we sell off again, and then this area is where the buyers really step back in for some longer term gains. I am hoping that what we don't have to experience is this. that's not going to be my favorite chart because there's not a lot of ways to feel like you're participating intelligently in that all-time high, all-time high, all-time high. Okay. So if we have something that at least pulls back first with a correction, then this is where I'll start positioning more for, okay, let's get back to the highs. Because once we get back to the highs, we stall, we break above them, and then off we go. I think that's where a healthier bull market is. This to me is not a healthy bull market. Okay. We have a correction, a pullback, a pause. That's a healthier bull market that I can position for. Make sense? All right, that's Qs. Let's go SPY. Okay, here's the daily time frame. SPY, price versus momentum. Price, higher, higher. Today is higher. Momentum, disagreeing. Relative strength, disagreeing. That's my divergence, right? RSI, RSI is here. Momentum is here. So it's disagreeing. It's that simple. Now, before I'm just saying, hey, we need to be short. We don't. I mean, the price hasn't really broken this. And I thought for a second that we had maybe a rising wedge here. The market clearly is playing games. So is this, and I'm curious, like, watch this. See this low, see this low, see this low. See how the market's right back up this high today? I do wonder if, like, today's gap is going to continue to be met with some momentum to the upside to get to these all-time highs, or if this is, like, the perfect little trap. Because if we just connect the lows, the lows, the lows, and we're hitting the backside of that trend line, you know, would it just take like one bear candle to kind of start this move, sweep this level, and we start coming back down? Again, not that I want to be short. I just want a chance to buy a lower price. I just want a chance to position for lower prices. Okay. Good question, Ken. Yep. So Ken's asking about support resistance versus supply and demand. So the easy thing is here, you can just find indicators for supply and demand. Okay. Resistance would be right here. Resistance is, you just look at a high. That's resistance. Okay. You look at a low. There's a bunch of lows here. That's support. This is support. Okay. Demand is any type of inefficiency that the market creates that's lower than price. This would be a demand zone. And because we're sitting at all-time highs, we don't have any supply zones. Like, there's no supply zones up here. Why? Because we've never been this high. So the only thing that shows is demand would be like, well, if we come back down to, balance out and find some liquidity, that would be down here at a demand zone where we have some inefficiencies. So support resistance is a little bit easier. It's just like plot your highs, plot your lows, see how price behaves off of them. Demand zones, a little bit more based on the inefficiencies and gaps in the market. Make sense? All right, back to the SPY really quickly. Price momentum disagreement, but go to the weekly time frame just to make sure it's not just all in one trade. Here's the weekly. Okay, so relative strength in the weekly. Relative strength down here. Still not at overbought conditions. We're very close to the all-time highs right here. Momentum is not disagreeing. So if we go higher, is it possible that we still go higher in momentum? We still go higher in relative strength before we start to see maybe this thing gets overbought, okay, or this thing gets overbought, and then we start to see a bigger turn. So, like I said, it's just not worth fighting, man. I mean, this market has clearly shown it doesn't care about all this crap, all this bad stuff. It's just like, go higher, go higher, go higher, go higher. Forward thinking. That's all this market's focused on, is forward thinking, right? All right, what else? We get on that. And I mean, you can go to a lot of, I mean, Dow's not quite the same, but pretty darn close. Dow, let's go to the daily. So the Dow, still not near all-time highs, but are we going to make, run back up to highs with some divergence? Are we going to make a run back up to highs and get maybe overbought on the Dow before we end up falling? Maybe, but this could still melt up to its all-time highs. Russell's a little bit different because Russell's way down from its all-time highs compared to the others. But, okay, this little window right here, some hidden bearish divergence on the daily time frame. I think the weekly still has more room to go. So this is why I'm not calling a top here. This is why I'm not like forcing sell trades, but a weekly move Is it possible that we just hit relative strength, overbought conditions on the weekly before the market actually prices in something different and prices in something that's somewhat bearish? Make sense? So just not there yet. Part of me wishes I was like more long the Russell, but I'm not. I'm long with shares around like 190, and I'm just going to keep selling covered calls. I've got an expiration out, I think, to the end of the month. My SPY, it's like I'm going to keep rolling calls on SPY, rolling calls on Qs, rolling calls on Tesla, MicroStrategy, whatever. Like covered calls have been good. Still trying to participate in whatever melt up this is going to give us. We've had more decision this week. Let's go to the SPX here. We've had more decision this week than we've had in the last couple weeks. Just based on today's gap and push higher. Look at this from the weekly chart. Okay, we had 2 indecision candles, and this thing is up. There it is. Right. So it's so close, man. It's so close to these all-time highs. This is the cup and handle symmetry from April 7th bottom. Highs at 61.45. Does the market care? I think maybe. We hit cup and handle symmetry. We might hit all-time highs. At least we stall here, or I wouldn't be surprised to have a pullback. Just haven't happened yet. And I'm only looking for pullbacks so I can buy some discounts, not too short. Okay. I'm not getting other than like a very near-term hedge. That's about it. Otherwise, it's just let me get a chance to accumulate more. Okay. All right. Let's go. VIX down 17.39. Let's go to the daily time frame here. It's a pretty big move to the downside on the VIX today. Move index fine. We're on dollar back down to lows today. Oil getting smashed for 2 straight days. Oil's down double digits. Oil from high to low is down 17%, 16.78%. That is a nasty, nasty move, and that ceasefire oil is down big time. Natural gas also down. I'm still going to hold long natural gas and just use my diagonal spread. Gold, like I said, interesting currency strength, dollar and gold combination today. Gold is down over 1%. Dollar's down as well. Equities are up. It's an interesting mix. Silver, same thing, down about 0.59. Bitcoin, 105. Bitcoin's holding its own. Like gold's down, Bitcoin's up. Interesting. So I'm still in it. I'm just curious, like, do we break these highs? Maybe. Or do we have more of a pullback? MicroStrategy 377, Coinbase 34. Oh my God, what? Coinbase is just freaking killing it right now. In 4 trading days, Coinbase is up 38%. Good Lord. 1, 2, 3, 4 candles. That's insane, man. All that was that stablecoin news. 37% in 4 days. Whew. Well, there's your big buy opportunity, which I had mapped. I didn't just buy shares. Once we had this flush, I was ratio spread, all profitable. It's fine. But this thing is up $160, $180. It's over 100%. This rip is over 100% gain on Coinbase. Wow. Ethereum behaving a little bit better. We came down towards that 5.0 pullback zone. I think a good swing trade here is like the 5.5 or the 6.18 pullback zone. Looking to hit either 28.60 or hold on to this thing to try to get back to these highs at 4,100. Copper up. I'm probably gonna lose $90 on copper this week. Japanese yen up in futures. This is a Swiss franc up again. Here is the Nikkei. Here is the EWJ. So EWJ is what I own. I have some shares of EWJ with these 2 levels. So my break even, I'm going to put this right in the middle. So ballpark is around 66.50. There. So that's my break even. I'm hoping we hit those highs again. DAX, pretty big gap up on the day. Let's see if it stays. I was still holding out for a bit of a pullback. Pullback to like the 30, the 38, the 50, somewhere in that zone. FTSE very similar. FTSE, if we pull back to like 30, 38, 50. China up on the day. That's a nice like 4-day turnaround on China. Brazil still hasn't broken this recent move above the 200-day moving average. ILF is Latin America, same thing, still not above the recent highs. MAG's at 54, gapping higher. MAG's also lifting. Large market cap up, so broad market's up too. Apple up a little bit on the day. Amazon up on a gap. Broadcom back up to all-time highs. Google down, but still manageable. I think Google stays above 150. Meta, fudge off Meta. 485 to 710. Like, look at this stupid thing. 47% up. Gosh. I mean, ratio spreads are fine. I made a couple $1,000 on Meta, but just frustrating. Like, yeah, I'd love to have, whatever, $250 a share in profit. Feels pretty good. Microsoft up to all-time highs with some overbought conditions and divergence. So, I mean, obviously be cautious on that one. Netflix back to all-time highs. NVIDIA at 147, creeping back up to all-time highs. Might as well set the chart alarm here. 153 to get to all-time highs. Tesla, big rip yesterday with the robo-taxi stuff that was announced. They had some robo-taxis running throughout Austin, and that was a big gain yesterday. I think it was up 8%. Berkshire, just perfectly timed for that little 200 EMA bounce. Anybody grab that, by the way? Anybody just do like a simple debit spread or something on Berkshire? That's a good trade. It's up, $15. I mean, directionally, that'd be great. I wish I would have taken that trade. That would have been a nice, maybe 485 by 480. Try to pay maybe $2-3 and have the remainder for profit by this week. Bonds catching a little bit of bid. I'm going to chart alarm sets 89 if I get this called away. 10-year is pushing a little bit lower. Curious how this all plays out. Average mortgage rate 6.81. Futures market, commodities, big drop in commodities because of oil. So DBC is down, getting kind of reset. Liquidity returning to the market with J&K and LQD. I mean, we're showing a lot more tighter credit spreads, more liquidity. Jobless claims, take a quick peek at jobless claims. This will be coming out on Thursday. Not really breaking trends higher, but it's continuing jobless claims that I started to notice was trending a little bit differently. The continuing jobless claims is starting to poke up. It looks like this is a kind of a breakout data point. So we'll know more a little bit on Thursday, but this is something to pay attention to. Non-farm coming into July will be interesting if we actually have just a disappointing jobs number. Unemployment rate, what's this one here? This is core PCE. Yep, so we're at 2.5. This also happens to be Friday. Friday's core PCE. Monday is going to be the end of the month, end of the quarter. So we should have news this week on Friday whether this Fed is going to be remaining restrictive if core PC comes down, or we'll see what the year-over-year looks like. Let's go China really quickly. CQQQ is up. Alibaba is up. Baidu is up. FXI is up. These are good. I have shares of FXI, shares of KWeb. I have shares of Baba, shares of Baidu. That's okay. JD is up to 32. I've got this one covered, I think, at 36. JD is covered $36 out to July. Try to get some of that little holiday drift maybe. Hopefully it gets called away. I'm set a chart alarm here at 36. 36 bucks. And covered call strike. There we go. Schwab dividend, fine. Schwab growth, nearing back up to highs. That's got to be doing a lot better here. I bought some shares of this one. SCHD is down, but SCHG is up. So the mix of dividend versus growth is just crushing it right now. And then SCHY is non-US. I mean, this is kind of nice. I have a mix here. So I'm down in dividends. I'm up. Let me just use arrows here. So I'm down in dividends. I'm up in growth, and I'm up non-US. So net about $3,600 to about $2,300 profit. And I think I like dividends. They're a little bit cheaper. You'll get a yield with that as well. So if price is up a little bit and you get a yield, you get that kind of multiple. SCHW, that's a trade for my pinch point scanner that's just running as it is. See here, we got a little profit on SoFi. Nice looking profit on SPY. TLT is doing its thing. So just continuing to trade. Is there any chance I could put long position on dollar CAD? Monthly time frame looks like there's a chance. I don't know if you asked that question earlier, Ken. I think dollar CAD, I want to see it fall lower, man. My position on dollar CAD would be I want to buy this thing at 34, 33, 32. I don't want to buy it here in the middle. I think this trade is good to avoid the middle, better to trade the lows or the highs and just let this thing be a range. I mean, and I said this yesterday, whoever asked about dollar CAD, I mean, if we come all the way back up here to this like 140, 141 handle, and we sweep out this recent high, then I would say, yeah, a pullback, a swing, then we go back up to highs again. Is that a play that the dollar's catching a bid, or is that a play that oil is getting weaker and weaker and weaker? I don't know. So in a way, it's like I almost would rather see like either one, like dollar gets weaker for this to go down, or oil finds a bottom back around like $60 or $55 to see if this goes up from there. Make sense? So I just don't like the middle. I think it's too messy with all this support resistance. So I would stay. I'm personally, it's like I'm not buying dollar CAD until we're down here. So if this would be choice one, choice two would be we actually sweep this high and then we have a swing, and I would look for that trade. So it's either waiting for the bottom or get a trend line break and confirmation to start putting in a swing trade. That's what I think. What else? China was up. I left off on JD, SCHDG, advanced decline. Everything's up today. Big move on the 50-day moving average. Big move on the 200-day moving average. Nasdaq, same thing. Big day. I mean, look at that. That's a big day on the 50-day. So the 50-day moving average, how many stocks are above? I mean, we were at 60%, now we're 74%. That's just a big up day. On the 200-day Nasdaq, other stocks, Costco, Walmart. Walmart, I've got a collar trade on, get it called away at 100. Nike. Nike has earnings on Thursday. I've got some exposure there with some naked puts and ratio spreads. Home Depot, still wanting to see like lower lows in Home Depot, like 285. Lows, same thing. Maybe down here towards like the 185 handle. MasterCard, kind of an aggressive move, right? I mean, just straight down here to the 200 moving average and then right back up. I wasn't paying that close of attention. That would have been another one similar to Berkshire Hathaway, just a nice little debit spread. Like a 535 by 530, or rather 530 by 535. Pay a couple bucks for it. Max credit's probably going to hit on Friday. So I just missed it. Like that 200 moving average was really solid on Berkshire Hathaway. So far, really solid on MasterCard. Visa didn't quite hit the 200, so obviously didn't set up. Amex, same thing, didn't really set up. Johnson & Johnson, better. I've got 130 and 135 puts on this one. Progressive, I put some ratio spreads on. CB, nothing. Palantir, up to some close to all-time highs. HIMS, huge drop on HIMS. 30+% on the news that Novo Nordisk, I think, is removing their weight loss drug within HIMS service or partnership, and so it's down 30+%. I already have some trades on here. I have HIMS. Let me go HIMS. I put this out for my Project Options Edge and Pulver alerts. Let's go to HIMS, see if I labeled it. There it is. Ratio spread 27 by 25. IV at 39. I mean, it's gettable. I mean, this expiration is January. It's inside the expected move now, so there's some risk in the trade, but it's still low delta. I mean, according to this, I have about an 85% chance that this is not assigned, which is fine. But could I go a little bit lower? I mean, are we going to drop all the way to like $25? I mean, maybe I can get something down here for like $20. Is HIMS that? It's like, if we don't do weight loss, we can't do anything. Is that how bad this is? I don't think so. So I'm hoping that there is a pretty aggressive bounce here. Maybe I can do. Let me see something here. Let me try to get creative. Maybe a trade for right before we have earnings. Expected move. Maybe a bounce off this 200 moving average around 36. If I went to, I don't know, this would be an interesting trade if I do like a butterfly put spread. So long put, and I pin this thing around 36 or 35. And I make 25 cents, got a little profit trap, expected move, make 43 to risk 157. I mean, it's an income trade. I'm probably better off just hanging onto the trade that I have. If I were to, buy the 30, sell the 28, sell the 26, that's still a terrible trade. It's just not out far enough. All right, never mind. I'm just gonna freaking sit on the sidelines. Let's keep the ratio spreads. Carvana, fine, nothing. Salesforce, O'Reilly, Redfin, Zillow. I mean, Redfin's up today. Zillow, better. Uber, big rip on Uber today. Autonomous ride-hailing service in Atlanta with Waymo. That's what I was hoping for, man. Like Uber's up, good. Lyft, they should be doing the same thing. Hold to buy, increase price target from 16 to 21. Let's go. Okay. Hopefully we see those recent, like that big spike on Lyft. I'd love to see that thing get back to highs. So back to $17, $18. I have an $18 call on my Lyft shares. Break even's $12.29. So let's see what this will give us if I go to Lyft, have all my shares and all my covered calls to July 18th. So the July expiration, $18 calls. If it gets called away, it gets called away. If it doesn't, fine. But if it does, it's like $6 a share on whatever, 3,000, maybe 2,000 shares. 1, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 1,500 shares. So $6. It's about $9,000 on Lyft. That's not nothing. So I'll see. Chart alarm's up here, $18. Move this down to 18. Or just edit it to 18. There we go. That's right on it. Cool. So $18. All right. Sector wise, pretty much everything's up except for energy. Currency wise, again, quick peek at currency strength. We have 12 minutes for the close. Swiss yen on top. That is weird today. Dollar's weaker. Gold is down. Silver pulling back a little bit. Bitcoin is fine. Equity's way up. World equity's way up. Just a weird mix for currencies today. Bonds are up as well. Yields down, bonds up. So kind of I don't know, an odd mix of correlations. Certainly a little bit more broken and kind of non-typical. So not really sure what to make of it other than cautiously bullish. That's it. IBM. I look at IBM. IBM had a big pop yesterday, I thought. Yeah. I mean, IBM is getting into like I mean, they're in the AI play. I mean, they're still like legacy tech. I don't know if this is like the AI agents thing, but 300 to 325, labeling it AI winner, noting yeah. I mean, it's all AI crap. Like, I mean, it's nice that like Dell and IBM and Oracle and some of these like old school names are having such a good run after being like beat up for a while. I mean, this thing peaked out here in May of last year. I mean, Dell is down, it was down 63%, and Dell is now off the April correction. Dell is up, 85%. You look at IBM, it's up to fresh all-time highs. I mean, a huge rip, even from the April dip right back to the 200 moving average. I mean, IBM's up 36%. So I may see this. I'm like, I'm not chasing this stock. If I could do something on IBM and say, well, I'm gonna take this trade at 2. I mean, look, I'll do the trade if it makes sense that I can make some income. I doubt it will. 37.7 IV rank. If I go out to the end of the year and say, look, I think that IBM will stay above like 215. Let's find out. IBM. Okay, go out to the end of the year, December of 2025, 215. Would I be willing to own some shares? Well, that'd be the April low. So 215 by 210. Let's see what a ratio spread looks like. 215 by 210. So I make $200. Okay, but would I own some shares or repair it? Yeah, I'd take some shares of IBM and repair it if the price target or the direction is looking better, right? If we're going to keep going to all-time highs, like bring it on. So let's go IBM here. Okay, profit margins lower than last year, dividend not well covered, high level of debt, trading below estimated value, earnings forecast to grow. I mean, that's kind of pricey for like legacy tech. Fair value 320 compared to its peers. I mean, gosh, it's just cheaper elsewhere, But even if it was fair value at 320, even if it stayed the same at 290, I could make money as long as we stayed above, this 220 to 210. I think we can do that, right? If oil keeps going lower, would that be a recessionary signal? Not really. I think oil, I mean, honestly, oil probably comes right back into like a tradable range. I mean, why would oil go in from like a, Middle East conflict to then de-escalating ceasefire? Why would that all of a sudden flag in recessionary? If anything, it's like, look, Middle East, put a pin in it. Nobody's fighting anymore. Growth is happening around the world. Spending is happening around the world. What's recessionary about that? Oil's just volatile. I literally said today, I'm like, somebody asked me about oil and all this crazy stuff. I'm like, so I don't trade oil. It's too geopolitically motivated. There's too much like manipulation. There's too much wild and crazy, silly, unexplainable moves. So I don't want to trade it. It's hard to predict. Like naked strangles on oil. Can you imagine? Like, I mean, your account's just busted if that's the case. So anyway, all right. I'm looking at a 215 by 210. I don't mind the trade. Probability of profit should be pretty high. Got a 94% chance of profit on the trade. I do have some capital I need to use. So like this account, this account, this account, this account can handle it. This account can handle it. This account can handle it. And these accounts can handle it. So my bigger accounts can handle it. I don't intend on taking a loss because I'll own the shares and repair it. I'm just going to do a ratio spread that gives me about $200. See if I can get like 215 for it. So here, 226. That's good. That's a good fill. I'll take that fill. So similar order. Okay. Well, that was a terrible fill. Next account, let me see if I can get a bit more for it. 225. Fill the 225. 225. Okay. 6436. Okay. So if this is all said and done, 225. 1, 2, 3, 4, 5, 6, 7, 8. So at an $1,800 trade, if we stay above 210, I do have a ratio spread with this one. So if it comes down to 210, I'm assigned. My break even if I took the assignment would be 210 minus 5 minus the 2.25. I'd own shares at 202. So IBM, if I had to own shares, gun to my head, 202 would be a 30+% discount, well below the 200 moving average, well below this trend. We'd have to completely reverse the course here. Not saying that we can't. I'm saying that even a pullback here around 270 to 260 would probably be offered with some dips. Pull back into 230, 240, probably offering some dips. So if it's an AI winner going up to 300, 310, 320, I don't have to sit and hold this thing all the way to expiration. I can take from the 225 credit, I can take, I don't know, maybe 50 cent debit or less, try to pull in a majority of the profit. All right, so let me get one added in. I'm going to add that into my project options edge. That is IBM. That is a 12/19 expiration. Buy the 215 put. Sell the 210 put. 225 credit. Willing to own and repair. Break even would be 202.75. Is that right? Yep, 202.75. Okay, so that's going in. What do we have? 4 minutes for the close. Good timing on that one. Project options edge right here. IBM 12/19 expiration. Buy the 215 put. Sell the 210 put. 225 credit. Okay, there's a 94% chance of profit on that trade. My assignment risk, if I get assigned, is 210, which is only about a 7% chance of assignment. Okay, and with that 7% chance of assignment, it also is, if I own it at 202, I mean, this would have to be like a 2 to 3 standard deviation move for me to be owning and also taking on risk. And also have to be going the complete opposite way of the current price and momentum. So again, there's no guarantee that it's going to be a winning trade, but starts off looking pretty good at first. So I like it. Chance of assignment. I'm willing to own IBM shares if price is less than 210 by expiration. Break even would be 202.75, and I'll add covered calls to repair and make, let's say, 5 to 10 per share to let go. Okay, so that's the trade. Let's go Edge project. There we go. So add this one in. That is IBM 1219 expiration ratio spread. Got it. Just add this last one in here. Okay, and I'll build this out on option strat really quickly. Build. This is going to be a put ratio spread, not a back spread. Whatever. Expiration on IBM going out to December. This is I'm just buying one put and I'm selling two puts. Here we go. So all the way down to 210, all the way down to 215. There's the trade. IV on this one is around 32%. There. Okay. Trade is in. 6093. One thing I want to check, we talked about this morning from the open. Look at this crap. Who's in my daily profit play? Look at this close. 1.11%. What did we say this morning at 9:30 in the morning? Based on the VIX and the rule of 16, this market could go 1.11% today. That's pretty incredible. It's fun to know stuff. So I was looking at the 60.95 to 6100 trade. I didn't take the trade late in the day, but man, it would have been nice to grab like 3 little net winners just based on using some liquidity levels and gamma levels. But 1.11 to the frickin' tick. Impressive. Obviously, it doesn't work all the time, but it's nice when it does. Okay, any other questions? Trades into IBM, Project Options Edge, you got it. Pulver Alerts, you got it. It's in the accounts. Near record Middle East tensions cool. Yep, we know. Tomorrow's a new day. We're only a few points away. We're like 50 points away from all-time highs. So is this it? Melt up city. We'll see what tomorrow brings. It's a new day. I'm not fighting momentum. Are we going to come back and fill the gap? There's no really crazy news this week. I mean, I thought last week with the Fed and a major OPEC cycle on Friday would be bigger news than it was, and it was kind of a nothing burger. So, and that was with Middle East stuff going on. So today the market rips, and a dip I want to buy. Just give me something useful. Otherwise, melt up, melt up, melt up. All right, any questions for today? We good? I'll let you go here for the final hour. Appreciate everyone being here. Market is closed. Tail of the tape. S&P up 1.1. SPY up 1.1. Nasdaq 1.52, Dow 1.19, Russell 1.26. World is green. VIX is way down today. Interesting, like I said, in the correlations, dollars down, gold is down, Bitcoin's up, bonds are up, equity's way up, oil smashed, natural gas down as well. Is there a rule on Tasty Trade for E-minis? I got forced out today at 240 price. I think I need some more information on that question, Larry. I got forced out at 240 price. I'm not sure, man. Like, what'd you get forced out of? I mean, the day it's like the market was up from 61.19 to that's what 19 to 49, so about a 30-point move on ES. So, Larry, if you want to bring the question in the morning, we could talk more about it, but I'm not sure what you mean, like got forced out. Oh, at time? Oh, I don't know. Did it hit a limit or something? Did you hit a take profit order? Did you hit a limit? Did you hit a stop loss? Like, what's the deal? Did you trade like a 0-day futures contract instead of going out for like the end of the week? I'm not sure. I rarely just buy. Yeah, I rarely just buy the futures contract. If I do, I mean, like for example, if I went to tomorrow, if I went ES here, so ES, if I were to buy ES, let's just say I go long futures. Okay, like this is good. I don't think they cut it off at that. That seems late. Like it should be cut off by like 5 p.m. Right? Like I think from 5 to 6 is like the blackout period for futures. So I mean, you should have until that time. I don't think they should just cut you off. If you don't know, you can obviously call the trade desk and ask them to see what the heck happened. But usually, even if you just go long futures for the day with no specified contract or timeline, then they should run until 5 p.m. So I would say tomorrow, give the trade desk a call and just ask them, see what they say. I'm curious too. So, all right, I'll let you go from there. Good stuff on the day. Up to some fresh highs. Markets are up. Cool beans. I mean, all-time highs are right in the grasp. Despite all the nonsense and all the noise, that's all it is. I think we're going to have a pullback. I still think we're going to have a decent pullback. Just be bracing for it. Just be ready for it. I'm not crazy greedy at these all-time highs. It is making me a little bit more cautious as we get into these highs. You can go back multiple years and see like, okay, we have a correction. What happens at the highs? We usually stall or correct. We come down, we come back up, we work our way through them, maybe come down here a little bit, go through them. It's like, I mean, we'll probably get above them. I just think we have a correction first. I hope we do. I just want to feel like some sense of normal, like, hey, I'm not insane. I can do technical analysis and not just miss out on just like melt up, melt up, melt up. But a correction, I mean, these are big gaps right here. That's a big gap. That's a big gap. That's a big gap. I could see price trying to find a way to hit them before there's a revisit. So hopefully it offers something. Left shoulder, head to neckline, right shoulder, same type of thing. I mean, I'd love a 58, 5,700 buy-in, take it back to highs, and off we go. So, all right, let you go. Happy Tuesday. See you tomorrow.